Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Friday, May 22nd, 2009. The euro-dollar pair continued its climb to end the week as the greenback faced further pressures on concerns about U.S. creditworthiness. The pair rose above the 1.40 level for the first time since January, adding to gains this week that have amounted to almost 600 pips. It's the biggest weekly gain for the euro since March. Also, signs of recovery from the global recession will undo the demand for the greenback as a safe haven. Combining those two factors can have very serious implications for dollar weakness in the medium term. The dollar-yen pair fell to a 9-week low overnight at the 93.85 area. The greenback managed to recoup some of its losses in New York trading. Equities in Europe and in the US rebounded from their losses yesterday, which helped to weaken the yen. For the week, the pair will end near where it started, but the price action this week pointed heavily towards greenback weakness as the dollar rose to start the week but then sank from Tuesday onward. The stronger performance in equities showed in the euro-yen pair as it managed to break out of its range seen in the previous 3 sessions. After cracking the short-term trend line representing resistance, the pair climbed another 120 pips, reaching the 132.70 area. That puts the euro about 400 pips higher than at the start of the week. Following a down move last week, this week's uptrend after a period of consolidation seems to be continuing. In fundamental news from Japan, the Bank of Japan, after concluding its interest rate meeting, kept interest rates steady and upgraded their view of the economy for the first time in almost 3 years, as they expect exports and industrial production to pick up following the significant deterioration in conditions in the first quarter. Policymakers also decided to accept foreign currency denominated sovereign bonds as collateral for loans, a move that adds one more avenue for companies and lenders to raise cash. In the UK, the second version of first quarter GDP matched the preliminary version in showing the economy shrinking 1.9%. The release shed more details on what made up the decline. Consumer spending, for instance, fell 1.2%, while business investment slid 3.8%. There was also a sharp pullback in both exports and imports, and inventories dropped by £6 billion, a factor also in the overall contraction. The pound-dollar pair climbed to the 1.59 level in late trading yesterday, tested that level around the Asian Open, and then retraced down to the 1.5760 area. From there, the pair found buyers, and the pair rose to breach the 1.59 area during the New York session. For the week, the pair is up about 750 pips as it broke out of a consolidation pattern that comprised most of last week. In Canada, retail sales rose 0.3% for the March period, which was slightly lower than expectations but higher than the change in February. It was the 3rd consecutive month of increases, with higher new car sales a main contributor to the increase. Excluding auto sales, sales were down 0.2%, breaking 2 straight months of gains. The Canadian retail sales release pushed the US dollar-Canadian pair to a low of 1.12 following a slide overnight after the pair broke below the 1.1350 level. After bouncing up off the 1.12 level initially, the pair retested that level in the New York afternoon session. Like the other pairs we have seen, the greenback was battered against the loonie this week, falling close to 600 pips. We'll see if this theme continues into next week or if there will be some retraction to this week's moves in next week's trading. Monday is a national holiday in the United States and a bank holiday in the UK, meaning liquidity will be limited. Important releases in the first half of the week include Germany's IFO business climate, the UK nationwide house price index, and US consumer confidence. And that concludes our coverage of the Forex market for this week. There will not be a video on Monday, so we'll return on Tuesday. As always, thank you for joining us here at cmsfx.com. And to our US audience, from all of us here at CMS Forex, have a great Memorial Day weekend.